and welcome to another edition of The Five with Fitz. I'm Keith Fitz-Gerald, and thanks for watching. You know, it is always great to return to the office after some time on the road with investors around the world and to see some green, this week especially, with big earnings on deck. Now, many investors are wondering, of course, is recent volatility the start of something more serious, or is it the usual run-of-the-mill October shenaniganry? I had a few thoughts in last night's Sunday Short, which you can watch elsewhere on the channel. What I want you to focus on today is this. No matter what your opinion about what's happening, remember these two things. Number one, opportunity is what you make of it. And number two, investing in optimism beats cowering in fear. Here's my playbook. Number one today, big earnings and a rally to the end of the year. Good question. The super savvy Stuart Barney very kindly asked me back once again to his show for my thoughts regarding whether or not I still see a rally into year end, my take on this week's action, and of course both Netflix and Tesla, which report. Now you can watch that video elsewhere on the channel as well. It is always an honor, my friends, both to be on and to know that you're watching. So thank you very much. Number two, Amazon hiccup today and half the internet sneezes. AWS, otherwise known as Amazon's cloud arm and the backbone of modern tech for the most part, went down early today, taking names like, get this, Disney Plus, Snapchat, Duolingo, Reddit, Coinbase, Canva, even airline websites like Delta and United along for the ride. Pun absolutely intended. Now, Amazon blamed an operational issue in its U.S. East data region. And to me, the takeaway is simple. It's a powerful reminder of how dependent our digital world has become on a handful of cloud providers like AWS, and not coincidentally, how fragile that concentration can be. Now, it reminds me, ironically enough, forget Amazon, it reminds me of CrowdStrike last summer. One system hiccuped and half the internet sneezed. Never mind that Amazon shares, which are higher this morning as the recovery gets underway. I'm more interested in CrowdStrike shares, which are running higher and faster. Shares of CrowdStrike are plus $9.41 and plus 1.94% as I record this versus Amazon, which is plus 163 and 0.77% respectively as I do this. Now, not for nothing, and this is what I want to point out to you, is that CrowdStrike has outperformed Amazon over the past 1, 3, 5, and 10-year periods. Just saying, think about it. If I'm from firm command of the obvious, right, and you've already got this covered, that's phenomenal. I bring it up because most investors do not have it covered, which is, of course, why they're falling behind despite the best intentions, despite two great companies. Now, if you'd like some help in getting ahead with stuff like this, like the One Bar Head family has been for a long time, I'll be here. Meanwhile, an investing tip in this department. People constantly want to invest in the hot stocks, and I get asked about those a lot. But a situation like this one, what's happening today with AWS, shows that it is often better to buy this, not that, despite what this and that seem like. Anyway, number three today, regional banks, the Euro version. European banks, including UniCredit, Barclays, NatWest, and Lloyds, all report this week. Now, I am really, really leery. Lloyds just announced a 1.95 billion pound, roughly $2.4 billion hit on car loans that could ultimately cost UK lenders 11 billion pounds sterling. Now, this is just while Barclays is also bracing for margin pressure and credit jitters ahead of the earnings. Now, what I want you to do is forget about the earnings themselves. An ongoing deterioration in credit quality in Europe will be the real issue. The U.S. version hit last week, but this could throw a spanner in U.S. markets if the Euro bankers don't choose their words carefully. So trade idea, very simple, very effective. Putskis, a bet that shares could decline on something called the iShares MSCI Europe Financials, a Euro banking ETF with the ticker EUFN, Echo Uniform Foxtrot November. Just an idea anyway. Number four today, buy businesses, not politics. White House economic advisor Kevin Hassett says that a deal to stop the now 17-day-old, it feels like a year, doesn't it? 17-day-old U.S. government shutdown is, quote, likely to happen this week. I don't know about you. I was born in the middle of the night, but it was not last night. I'm going to believe it when I see it. Anyway, meanwhile, I'm going to continue to invest in businesses that can succeed despite what's happening. Always remember that money is like water in that it tends to flow to where it's treated best. It also tends to rotate quickly back into strength, meaning into the companies that are still posting profits, raising dividends, and having buyback shares while everyone else is arguing about the headlines. That is where the real opportunity is, and don't you ever forget it. It always has been. Now, my POV is that this is yet another textbook perfect example of why you buy great businesses, not broken political models, no matter which side of the aisle you call your own. And finally, number 5 today, this is a big one. Don't fall for the clickbait. China's growth isn't weak. Now, CNBC and many other sources are out this morning with a report highlighting a rare and alarming drop in China's GDP. Now, not so fast. Industrial production actually rose 6.5% year over year, while consumer spending is up 3.0%. The reason fixed asset investment, including real estate, dropped, which is the headline they're picking up on, the doom and gloom mongers, is because China's economy is transitioning from one that's based on making stuff to all things digital, which means that the real worry would be if the numbers didn't reflect this. Now, the pontificators will never tell you as much. A, because they've never been to China, many of them, and B, they don't understand what we're talking about. China's growth is not weak. It's evolving just like our own did. So here's an investing tip in this department. You never bet against evolution, only those who fail to adapt. What's happening, by the way, reinforces the case for several key investments in the OBA model portfolio. And if you're an OBAer, stay tuned because I'll be sharing more detail in today's update a few hours from now. The bottom line today is that the markets are great at making you uncomfortable in the short term if you're in them, and the best in the world at making you uncomfortable longer term if you're not. Let that one sink in. Anyway, as always, let's make it a great day and a strong start to the week. You got this, I promise. Thanks as always for watching, and I will see you again tomorrow. Cheers.